Okay, we're going to look at entries for a process cost system for Chapter 3. Preston and Grover Soap Company manufactures powdered detergent. Phosphate is placed in the process in the making department, where it is turned into granulars. The output of the making department is transferred to the packing department, where packaging is added at the beginning of the process. On July 1st, Preston and Grover Soap Company had the following inventories, and it gives us our list. Departmental accounts are maintained for factory overhead, which both have zero balances on July 1st. Manufacturing operations for July are summarized as follows, and it gives us all of our information. Okay. Step 1 says to journalize the entries to record the operations identifying each letter, okay, which is what we're going to be doing. So if we pop back up here, letter A, materials purchased on account for $149,800, where we learned how to do that one in Chapter 2. I'm going to come up here on my working paper and just circle 3-1B so I know that this is B. The date I'm just going to stick in the letter. I've purchased materials, so I'm going to debit materials for $149,800. And they were on account, so I'm going to credit accounts payable for the same amount. Okay. Letter B, materials requisitioned for use. We requisitioned phosphate, packaging, and some indirect materials. Okay, so we need to keep track of all of that. And again, this is kind of an extension of the entries that we learned how to do in Chapter 2. In this case, we're working with 2 different departments instead of a single department. So we're moving materials from materials into work in process. So work in process in the making department was $105,700. Work in process for the packing department was $31,300. Factory overhead for the making department was $4,980. And factory overhead from the packing department was $1,530. Okay. Now, all of these numbers, I just pulled them right out of my textbook. Okay. Making, packing, and then the list of the numbers right here on the right. So we pulled all of these things out of our materials warehouse. So we're going to credit materials for the total. So we add those numbers together, and we get $143,510. Okay. Letter C talks about our labor. So we have direct labor for both departments and indirect labor for both departments. Remember, indirect labor is going to go into our factory overhead. Okay. So letter C is going to be work in process for our making department, $32,400. Work in process for our packing department, $40,900. Our factory overhead for our making department, and this is where our indirect labor goes, $15,400. And then our factory overhead for our packing department $18,300. Now we're talking about labor, so we're going to credit our wages payable for the total. Doesn't matter if it's direct or indirect. And the total for this one comes out to be 107 even. Okay. Letter D is working with depreciation. So depreciation charged on fixed assets for making and packing. Again, when we talk about depreciation for a factory, that's going to be listed in our factory overhead. Whoops, sorry, I keep bumping my paper here. So we're going to debit factory overhead. For making for $10,700. Factory overhead for packing, $7,900. Whoops. And accumulated depreciation for the total, which is $18,600. Okay. Letter E, expired prepaid factory insurance. Okay, expired prepaid factory insurance. So in this case, they actually told us what prepaid expense it is that we're paying here. But again, we know that this is also going to go to factory overhead. We learned in Chapter 1 that materials, work in process, are things that can be specifically applied to a job. If it's just insurance in general, it cannot yet until the end. So factory overhead in making is going to be $32,500. Nope, let me tell you again, $2,000. I pulled the wrong number. And factory overhead and packing is going to be $1,500. Again, it told us that it's the insurance. It's the prepaid insurance. So we can go ahead and credit prepaid insurance since we know what prepaid expense we're talking about for the total of $3,500. Okay, letter F talks about applied factory overhead. Now, if you remember in the chapter, in the PowerPoint, we talked about over-applying and under-applying, okay? This doesn't exactly tell us whether it was over-applied or under-applied. So we are just going to make the assumption that we need to debit our work in process and credit our factory overhead, okay? So letter F is going to be a 4-line entry. We have work in process, making, okay, because we're just assuming that this is their estimation. This is their initial application of our factory overhead. So what we're doing with this journal entry is moving the information, moving the cost from our factory overhead into our work in process, okay? Now, all of these other accounts, we've debited 2 and credited 1, debited 2, credited 1. This one, because we're talking about moving it from factory overhead to work in process, we're going to actually have a 4-line. We're going to debit both work in processes and credit both factory overheads because we need to move it from each account, each factory overhead account, into each work in process account. Okay. Okay, letter G, production costs transferred from making department to packing department. So remember at the beginning of our problem, it said that they're going to make it in the making department. They're going to then move it to the packing department. So that's what letter G is talking about. It's just that movement from one spot to the other. Okay. So we're taking whatever's in our work in process in making and moving it into packing. So we're going to debit work in process packing because packing is receiving whatever these costs are from the making department. which is 166,790. And we're going to credit work in process making, because we're moving it out of the making department and putting it into the packing department. Now you can see where we talked a little bit about lean manufacturing in chapter 3, and you can see where that lean manufacturing, cutting down that 10 different departments down to 5, can be really helpful when it comes to accounting, because you're not working with as many different departments. In our case, we're just working with 2. But can you imagine a larger factory where we might have to work with 10 or 20 different departments? Okay. Letter H, production costs are transferred from packing to finishing. So again, it goes from making to packing to finished goods. So we're going to take it out of packing and put it into finished goods. So we're going to debit finished goods for $263,400, and we're going to credit work in process packing, because we're moving it from packing into finished goods, for the same amount, $263,400. And then our last one is cost of goods sold during the period. So we're going to move it from finished goods into cost of goods sold. And again, this is very similar to chapter 2. So cost of goods sold is our debit for $265,200. And finished goods is our credit, because we're taking it out of finished goods and putting it into cost of goods sold. $265,200. Okay, and that's your last entry. So once you're finished with this problem, you can go ahead on to the next one, which the next one you're going to create a production report. Have a great week.